We are live at Happy Tuesday. Rodney, how are you, buddy? You doing all right?
Doing great. How are you doing?
You know what? I am doing finer than frog hair. Isn't that right? I think
That's it.
that's,
Something like that.
yep. So it's pretty exciting on what's going on with rates today, huh?
No, it's not.
It's like we were talking about last week. We're doing a new thing, and what Rodney and I have decided people are looking for are fast answers. And so today's topic is going to be what to expect when you're getting a home loan. And Rodney's going to take us through the steps. He's the smart one in the room, so we're going to go through that.
Hmm.
But if there's other things in the news that are important, we're going to bring that up too. So when the show is over, I'm going to put a link to the so you can fast forward to the chapter on our topic today. Again, what to expect when you're getting a home loan. But today there's some stuff going on with rates. So if you don't mind, we're going to go through a little bit of Rodney's rates. Only take a couple of seconds here.
All right.
That's right. There it is. So let's do
Yes.
sloping. There we go.
You got it up. All right.
Yep.
Well, look, you can see the red is no good. Um, from about July 14th, you can see right here that, it's kind of, even though we haven't gotten a lot of bad news during this time, we've just been taking a beating here on August 2nd. We're recommending a lock right there. On August 9th, we're recommending a lock before this goes down. And then, of course, right here, recommend a lock on August 10th again, and before you see that dive, and you can see how low it's hit. That's its
Wow.
lowest level right there, but it has rebounded up to about right here right now. So we're on the day, we're only down, very insignificant 2 basis points on the day, but you can see. And my best guess, Andy, is that just all the news and that they not probably not 100% sure that they're gotten the employment and inflation exactly where they want it.
Right. And so that leaves us with an uncertain situation. I mean, that's basically it, right?
Yeah, I think that they're just that they're thinking that rates are going to rise, so they're getting ahead of it, like Wall Street does. Like if they think a stock is going to go a certain direction, they're not going to wait till that announcement or whatever. They're going to go ahead, and investors are going to get in front of it. And I think that's what we're seeing with these right here.
Okay. All right. Well, that's not exciting news, but you know what goes up must come down, and that tends to be how things are. So here we're going to get started, and the link will come right to this point where Rodney and I are going to cover one topic, and what we're doing is answering the question, um, what to expect when you're getting a home loan. If you've never been through the process, I'm telling you, I understand it can be intimidating, and it stops a lot of people in their tracks because they don't know what to expect. They don't know what questions to ask. And this live stream, plus, I want to show you something. I want to show you something. Look at here. We got a call-in number now. That if you want to call in, you can call 615-653-4499. Now, this is only going to be, of course, while we're live. But instead of trying to type in questions into the chat box and that kind of a situation, we can now take live calls. And as this thing gathers steam, I expect that to be one of people's favorite features. That's what I expect on that. So we get to make those calls. Rodney, are you ready for that?
I'm ready. Yeah, I'm ready.
When
Caller
somebody
caller
calls.
zero.
Here we go. So we're going to start this way with the what to expect when you're getting a home loan, Rodney.
All right. Well, good morning, Angie. I think Angie jumped on there. I don't know if you can see in the comment section, but Angie jumped on.
Hey, Angie.
Good morning, everybody, or afternoon, I guess. What to expect when you're getting a home loan? Wow, that's a lot. We could actually talk about this for hours, actually. But I'll give you just some typical stuff. The first thing you want to do is get pre-approved. Okay. Um, Talk to the lenders, get a pre-approved for a loan before you start looking. My recommendation is, I mean, if you're budget conscious, um, I'm the type of person I would like to know the details before I get into the home search and just understanding who pays for what, what's expected of me. So first step for me is get approved, go get your finances in order, make sure your payment fits your budget and things like that. That is what you want to do. So when you do the next step, the fun stuff is start looking for a house. You'll have all that behind you. So get pre-approved.
And can I interject on that?
Yes.
Okay. When you're getting pre-approved for a certain amount, what you want to do is you want to make sure that the amount that you're looking at is getting you the house that you want. And so you're going to have two things to consider: the price of the house and how much house that you're getting, which is going to change based on the location. Some places are more expensive than others, and some places you get more bang for your buck. I've heard that a million times.
Mm-hmm.
But getting pre-qualified will help you understand how much house you can get, and sometimes if you're blocked out, so to speak, from a particular location.
Yes, and then we're going through the approval process. You should know that when you're out looking. Say you get pre-approved with me, you're out looking with Andy. You will know that, okay, if I go up $50,000 to get in that neighborhood, or I want a pool and that costs usually $75,000 more or whatever, you're going to know exactly what that does to the payment, and we're going to already have those discussions, and you'll have those items in writing. So that's a very good point, Andy. Number two on here: submit your loan application. You formally apply, and this is pretty easy. Most people don't charge for application fees and things like that, and you can apply and get your credit ran and submit your documents and have them look at all that stuff, so you don't have issues later down the road. Being in the business for a long time, there's one truth always to loans. Like, if the loan officer does a good job on the front end, it goes smoothly for the most part. Um, there's always stuff in houses, right? There's inspections, there's title issues, there's sellers, there's buyers. You have a million issues, but you don't have a lot of loan issues if you do this stuff. Submit your loan application up front, get your documents in. Um, we look at your income and assets. We take care of your income and assets. 99% of the problems are avoided with that step right there.
And
It goes.
and I can I interject?
Please.
I'm going to keep doing this because I mean you've brought
Well, I
some
mean,
really
you
good
got a
points.
microphone. I can't stop you anyway, so you don't have to ask.
I do have a yes, and it's a nice one too. The um, one of the reasons that I have such a strong relationship with Rodney and his team is that when he's talking to buyers, whether they're brand new or experienced, I mean, things change. If somebody hasn't bought a house in 5 or 10 years, some rules have changed. And so they need to be updated on that. But what Rodney and his team are really good at is getting the information they need from the folks that are trying to get the loan. And they're not shy about what it takes to get a loan. And so all that means is quality information means a quality result. And that's what these guys, they know how to ask the right questions to get the right answers to get the job done for the client, period. That's it.
Yeah, I mean, our job is everybody don't understand what the mortgage business. I mean, everybody don't understand every business. It's like I don't understand the car business, right? So when I go in there, if somebody comes in, we're going to give them the right information, and it's our job to direct them through the process as well, right? And say, because we know what it's going to take to get through the system. We know what it's going to take for Fannie to approve it and things like that. So that's the big part about it. We're trying to just lead you through the process by asking these for this information, because we know what it's going to take to get there. So
Right.
the step number 3 at one of the, well, not step 3, but one of the important parts is getting an appraisal. The lender will order an appraisal to ensure the home is worth the loan amount. Yes, the appraisal for us is only documenting the value of the home, as good as it can be, right? A house is really valued at something somebody's willing to pay for it. But for Fannie Mae, that we have to have comparable appraisals means something very close, sold in a similar, similar size, sold for a similar amount, basically. It needs something on appraisals. It just needs to be very close. People think about comps. You don't change counties. You don't cross major interstates and things like that. So we'll get the appraisal and help you with that to make sure the value is there and you're making a good purchase.
And a word about appraisals, that's changed over the last year and a half. The last couple of years, there was a thing called appraisal gaps where values were going up so fast that appraisals couldn't keep up, and people were bringing extraordinary amounts of money to the table just to get the deal done. And that has, at least on the things that I've seen, maybe it's different for you, Rodney, that has trimmed back pretty significantly. Is that the case with you?
100%. What I'm seeing right now is when the appraisal gap was always the difference between what they're buying it for and what it appraised for, because they knew where they were having to bid over value just to get it. Now today, when we see appraisal come in lower than what it was listed for, or what their seller was expecting, it kind of goes through the similar process or same process we used to do in the past. It is what it is, but if the buyer had some information they wanted to challenge it, like if they knew of a comp that just sold or wasn't on courthouse records or anything, any information they could provide, we can go back to the appraiser and ask them to look at it and see what they thought. And they're very agreeable. They're like, I've had one the other day that like missed a sale, and he couldn't believe, he was mortified because he rarely does that. But that's why we ask every time, because it's somebody will have a good point occasionally, and that's why we go through the process every time, just to make sure it is what it is. So.
And the reason that it might happen, about a dozen years ago, the government separated appraisers from everybody else. They sort of on their own island, and there's a lottery system if they want to pick up a particular job. And most of the time they get areas they're familiar with, but sometimes maybe they're in a place that they're not completely and totally familiar. There can be a Clarksville guy come down to our part of town, and they might need help establishing value because they don't live here, So
yeah,
and that's the circumstances when that's happened, and it's been rare. But when that happens, that's why it happens that I've seen.
Good info. And number 4, verify information. This is just very simple stuff. The lender will verify all information on your application through basically through documentation, meaning that we're going to get, if you say, okay, hey, we have $100,000 in a bank account, we just have to get the bank statements. And we also do some due diligence in their bank statements, make sure there's no payments and stuff like that coming out of them. And they make sure there's no, like where the money's coming in from. So you gotta source the money coming in and things like that. So we verify all the information throughout between the offer and the closing. We're constantly verifying and updating information on that file the whole time.
A thought on this: whenever, as a buyer, you're going to hear pre-qualification and pre-approval, and I think Rodney, you said did you say, do I remember this correctly? You said there isn't a difference, or there is a difference?
The terminology is different. For the terminology, for like a FDIC terminology, a pre-qualification literally means that we just talk on the phone or talk, and I run some numbers on pieces of paper. I haven't pulled credit report and things like that. Pre-qualification really means it's been through underwriting. So that's kind of but we use that term a little bit.
Pre-approval? Did you mean pre-approval on it?
Yes. Thank you. That's why you're here. Don't ever discount yourself. I can't do this without you. All right. So yeah, the pre-approval part is where you actually document everything. So we send out a pre-qual letter, but what we do is we verify the income and the assets, and that takes care of 99. Because when you have somebody pre-approval, actually that pre-approval letter is like a commitment to lend. So it's, the pre-approval wording for some government agencies are a little bit stricter than what we use it for.
Right. Yeah. So when you're doing your initial conversation with the lender, my tip is, if there was a tip on the pre-qual part, be as accurate as you can in the beginning, and that'll help the lender to have a better estimate when the pre-approval comes through. I mean, best guess
Yeah.
sometimes isn't the best.
Yeah. Anytime you're going through this process, I'm always discussing. I always want to see pay stubs and bank statements going through this process. Otherwise, it's going to be an opinion without any kind of substance, right? So jumping into the underwriting review, underwriters will analyze your credit, income, debt, and assets to approve the loan. This is I'm going to bust a little bit of a myth right here.
Okay.
Underwriting review. Underwriting is automated for the most part. We do manual underwrites, but right now I'm talking about, say, 95% of our loans that we put into the system. We click a button that says, for desktop underwriting, loan prospector, whether it's Fannie Mae or Freddie Mac, and it tells us what to do to get that loan approved. So basically, we hit the button, assume everything's right when it goes in there, right? And so you hit the button, it tells you what items you need for that loan to be approved. So what happens, we gather that information, we verify it, and then we submit it to the underwriter and let them just double check the computer approval to make sure we're all in, all that's done.
Okay.
Then that moves us on to loan conditions. Like, say, after they review, they're going to come out with their loan conditions. Loan conditions, they're going to require certain conditions before final approval. This may be, okay, we want to verify the sale of your subject property so you have the funds to close on a new one, something like that. Okay. They may want to see an extra pay stub or whatever the condition is from that list. So really, they're really just verifying and validating the desktop underwriting findings that come from the computer. Okay, in a normal situation. After did you say something, Andy?
I was getting ready to jump in on just one thing.
Go ahead.
When somebody's going through the loan process, I'm going to tell you that it's a little bit, it can be a nervous time. I mean, because it can be a nervous time. But what I want you to remember is, it's going to sometimes feel like the lender is going to be, or their processor may be asking for information you're certain that you've sent them before, and it'll feel like a repeat. I've already sent them that and all that kind of stuff. Well, there's a lot of documents flying around, and and you may or may not have sent that document in before. But here's the thing: they're probably getting ready to give you $600,000-$700,000. So give them the document, send it to them again. It's okay. But don't be surprised. Go ahead and expect, and that's what today's live stream is about. Go ahead and expect somebody to call you and say, "I need this document." You may or may not have sent it. It doesn't matter, and that can happen right up into the day before, before you get that clear to close. It can happen. So always be sort of ready for that.
Good point there. We go to loan conditions. We just talked about that, and then once we get, say, they ask for that information, we'll send the processor send that back in for final loan approval. Basically, the underwriter signs off on everything's been dotted, all the I's dotted, T's crossed. We're ready to go. And then it's basically after that time, it's closing disclosure. It's not necessarily in this order, but you've seen a closing disclosure 3 days before you're closing. You have to see it 3 days before you're closing, so that's a law. It's
you have to verify that you've. You have to verify that you've seen it.
Yes, we have to send it to you and you have to accept it and all that. But really, we want to go over it with you and make sure, because this is where the rubber meets the road, right? When we first talk, we talk about, I provide you with a piece of paper that says, hey, here's what our fees are. Here's what your contract is saying. This is how I think it's all going to shake out, because we don't control all the fees. So once the closing disclosure gets issued, that means we're very close to having all of our final figures, and it's a good time to start reviewing the money again. Now, we are capped, like we can't change fees. All that stuff is gone. We can't change fees and add fees to your closing disclosure anymore for you to be like, oh, where'd that fee come from? That's actually illegal. But for us, it's just a good time to go over it, make sure we're all on the same page, talk about where we're going to wire the money and all that stuff. That's the time we do that. Number 9, go ahead, Andy.
When now I've seen it in the past where, and I don't know that necessarily a buyer is privy to this, but I've seen a lender and a title company balance that at the final end. There can be some back and forth a little bit. Is that are buyers privy to that?
A little bit. Like we're going to send out a closing disclosure that's not 100% accurate the very first time, because we actually try to send it well before the 3 days, like 10 days or 2 weeks,
Right.
just to get it out of the way. And that's when we feel like we've got enough information to get a good, get it really down, not fine tuned, but just down within a few dollars.
Right.
So that's what we do that for. But yes.
Okay. Okay.
And then it after your CD is signed, your loan's approved. The next thing you're waiting on is just to go to closing, sign your documents, and get your keys. Which will be this is the celebration time. This is you go in, you ask the attorney any questions you got about these papers and things like that, and then it's all time. And at funding time, it's funding for you is no different from signing your documents. As soon as we send the closing package, we send the money. So the wire's there, the funds are there. That's why you get your keys, is because they can transfer the money immediately to the seller.
A lot of times people will ask, how long does it take to close? And that's entirely up to you. You'll see a buyer package is pretty thick. There's a lot of documents. It's basically a repeat of I promise to pay, I promise to pay, I promise to pay. That's what it is 600 times. It's basically it.
It's a bunch of lender forms, and then you got your note and deed of trust, which are the most important documents in there. But it's all, honestly, all that stuff is 99% of it's to protect the buyer.
No question. I'm not making fun of it, but that's you'll figure that out as you go through the process. And so I've seen people close as a buyer that's familiar with the process. They close in as little as 20, 30 minutes, and I've seen other people that ask a question on every other document and can take a while. So that's up to you. That's.
Do you mind if I throw something in? I won't throw something in like all these are very good points of the what to expect. But some of the things that we've done, specifically to try to make these areas a little bit smoother, is a lot of tech stuff with still being. I don't want to call it high touch, but high. We're still high touch, meaning we're still available on the phone, still talk to everybody. But we have a lot of technology that makes this a lot easier. Like our pre-approval, Andy's all online. You can do, you submit your loan application, all that stuff. Like loan conditions, like you talked about in the past, they see every document through that portal that they've put in there. So if we ever ask for a repeat of a document, it's already in there, and they can just say, "Hey, go to number 3." And it happens. It happens with everybody, but we have it all to where it's very easy for the customer. They can take pictures of it with their phone, submit it to us, the documents that we need, and even when they go to closing, they shouldn't be signing but about a dozen pieces of paper, because the other 50 can be e-signed on their phone, and
Mm,
they always have a copy of it in their app as well, so they can go back and reference those closing papers 5 years later if they want to.
got it.
Yeah.
Oh, I didn't. That's a new process. That the digital stuff is constantly changing.
Yeah, and
It's
it's getting really good. I mean, we're really liking it. It's changed a lot for the way of the buyers, because it's we go from application to them submitting their documents within minutes now. It used to be a few day process, but it's really because the system's already seeing what it needs and it's asking for it, and it makes it a task where people just fill it out. It's an easier system for people to do.
and I understand from our title guy, we happen to Rodney actually introduced me to him. They're saying they're like this close to being able to accept digital signatures because currently the title company is called a wet signature, I think, pen on paper. And
Hmm.
we closed the deal with them up in New Hampshire the other day. Well, they had to send a notary to this guy's house to get signatures, the wet signatures, to send them back so that they're physically on at the title company. And he's saying that they're like this close to doing e-signs with
Yeah,
title. Yeah.
and they are.
Uh,
Yeah, it's actually there's some stuff that's going through Congress, that's going to allow that. Um, so it's
yeah.
when they do, and that's one thing. I guess our district person, he is all about the total e-close, and that's like right now. I love it, man. We got like a dozen documents where the customer's only signing right now. That's and the rest of it's an e-sign on their phone.
Yeah.
I'm
Yeah.
like, man, So, anyways, yeah, they really love the new one, but when they go full digital, it'll be nice.
It'll be nice. And, and I mean, and if you happen to be in a generation that you're not terribly techy, don't worry about that. A lender will meet you where you are. If you might have a flip phone. Well,
Mhm.
you're going to have to do something different, and so don't worry about that. Don't feel like that's the case.
Right.
I did have, say that again.
High tech, high touch. Yeah, if somebody can come in and do a paper application, if they want to. I mean, they can.
Absolutely.
We can do it face to face. There's no problem with it.
I had a couple of other thoughts here, if it's okay. The the lenders still do a snapshot that like close to the day of closing? Is that
They do. They do. Some require what's called a soft pull. Like they look at it and they kind of compare your balances to see if you've just opened up any kind of credit or anything like that. But it's
which
it's the consumer doesn't know that there was. It's called a soft pull because it's only available to lenders, and nobody else can tell that the credit's been looked at. Like
right?
it doesn't affect the score or anything.
The reason I mention that specifically is if you're getting a loan for a house and somebody says, "Hey, you're clear to close," that does not mean that you have the right to go out. You have the right, but they're not giving you permission to go out and buy a car or washing machines or furniture or don't do that.
Right. Right.
Please don't
We
do
yeah,
that.
yeah, we actually have something that goes out to them and just reminds them, say, hey, during this process, please don't do any of that. Unless you tell us. I mean, obviously it's your money, you can do whatever you want to, but you know, you got to go to closing and sign something that you've added no new debt since the application. So
Our good friend Angie, hi Phil and Wendy, has a question here that I'd like um, to add. Why is that up there? I don't know why. Let's do this. Bing. There we go. Oops. There.
how
Got
many
it.
comps do they need? Do they do? They
Three to
normally
five is fine.
do. They normally do three comps. Okay. And then they try to find a listing, and then maybe one more just for giggles. But that's normally what they do is try to find us three as close to the property as can. They will go out. Fannie Mae would rather you go out in time to do the next door neighbors than to do one 2 streets over that sold 2 weeks ago.
Say that again.
Fannie Mae is proximity right now. They believe that the house that sells right next to your house is a better comp than one, even if it sold a year ago, they can do time adjustments based on the market. It's better than one, say, 4 streets over,
That's
or, whatever, that sold 2 weeks ago.
yeah, yeah.
Proximity is a big deal for Fannie Mae.
And I can't, man, I'm backing you up 100% on that because that's where a lot of sellers get in trouble over the years. I've seen it time and time and time and time and time again.
Mm-hmm.
I'm seriously serious about that they'll say a house a quarter of a mile away, like that's similar to theirs, sold for X amount of dollars more. Well, it could be that's because it's a quarter mile away,
Right. Yeah.
and they will base and they will insist sometimes on basing their price, their listing price, on another property that really it looks good, but it's not in the right place. I mean, the real estate truly is a local deal.
Yeah.
Couldn't be more right about that. We've got another one from Ange here. All that digital stuff is going to freak me out.
It really won't. And here's why I say it, because it just makes it convenient for you. It's like you apply online and we start our, and it's basically like transferring our documents and giving you updates and things like that, just so where you have a little bit more control of the process in this app, because you know what's out there, you know what's needed to be done, and you're in control of that. So it's really not like I've got to figure out, like, if you want to stress me out, just say, Rodney, you've got to figure out how to maximize the use of your iPhone, right? I'm like, no, I don't need to figure it out. I know how to call, I know how to take text, but I'm not looking to launch a rocket from that thing, right? So
I can vouch for this.
Yeah. I mean, I don't know all the stuff. I use my phone a lot. I use it for everything, but I'm like, there's other people that know a whole lot more about that phone than I do. So, but I'm just saying that the systems are really easy, Angie, to where it's really consumer friendly versus something that would stress you out.
And what I'm going to add on that, and we're really done here, if that's okay. What I'm going to add to that is that when you've established a relationship with a lender that you can trust, the digital stuff is a little less intimidating. Because I can see situations where if you didn't know somebody and they're sending you e-documents to sign within 7 or 8 minutes, that could be a little off-putting. I would see that. But working with somebody that has learned about you and that you can trust, you can build that trust, you'll be just fine. It's the way to go. I mean, digital is.
Yeah, if it's just any ever hang up, it's just, just pick up phone, call us. I mean, but it wouldn't be. I mean, she's sitting on a podcast right now. She's far above the handle the technology requirement for like online stuff. So it'd be good.
We're good. So, hey, this is I think that anything else to add there, Rodney?
I'm good.
Okay. Then this is our first foray into fast answers. The goal of the podcast is if you're looking to get a loan, to give you the answers as quickly or as concisely as possible. Of course, with a little bit of conversation, because there's lots of gray area in there. So, Rodney, I love this a lot. We get to do it again next week. You okay with that?
Next Tuesday, 1 p.m.
Tuesday, 1 p.m.
Expect all callers. Get you a switchboard.
Okay, that's right. We got a phone number, man.
That's
Phil,
right.
Wendy, it's really good to see your name pop up. Hope you're doing well. Sometime in the future, we're going to have to talk about investment loans too. Ange, as always, you're such a good person. So glad that you're here with us. Glad we got to answer some questions. And listen, have a great day, everybody. Thanks a lot, Andy and Rodney. Saying goodbye. See you now.
See you.